Hi, John here with North Peak Invest. Welcome back to NPU. Today we're going to be talking about making investing decisions in a wavering or even a downturned bear market. First of all, let me start by telling you that it isn't that complicated. If there's at any point during these educational videos where I can throw in all kinds of charts and graphs and statistics, now would be the time. But that wouldn't win you over. It really isn't that complicated. We'll start by going back to the basics. I am not a financial advisor, and I don't hold any credentials that certify me to tell you what to do with your money. But I can tell you this. Any financial advisor worth their salt will tell you that investing is not about timing the market. There are 3 secrets to creating generational wealth. The first is your income and using it wisely. The second one is diversify. Don't put all your eggs in one basket. And the third is thinking long term. Whether you buy a rental property or stock in a mutual fund, the most reliable way to make money with your money is to leave it in there for at least 5 years. You want to plan on putting your money somewhere where it will create long-term appreciation. 5 years is the minimum recommended time for leaving your money in the market, because after that amount of time, statistics generally show that the market will have grown by at least some margin. Although I cannot give you a specific number for how many days or months or years you need to own a rental property, the same principle is true in real estate. Think long term. Like I said, back to the basics. Now, if you've watched any of our other videos, you know that we invest in the Midwest not for appreciation, but for cash flow and stability. We only plan on about 2% appreciation per year. But even at 2%, over a 30-year term, you still come close to doubling your money. Not bad. However, we invest in the Midwest because cash flow is not hard to come by, and when there are losses, they are usually in the single digits. We look for good deals that come with equity, that cash flow well to create a reliable stream of income during any market for our investors. Let me remind you also, there are 4 principles that make real estate a good investment. They are appreciation, cash flow, tax advantages, and loan paydown. Even if there is a market in a downturn, 3 out of 4 of those principles are still working for you. You are still receiving cash flow, you are still getting the same tax advantages, and you are having somebody else pay your loan down for you, which increases your net worth every month. So when I'm looking at my mutual funds and watching them decline and seeing lots of volatility in the market, I'm thinking about putting more and more of my money in real estate. Let's take a look at the last recession. Between December 2008 and July 2009, the bubble burst and the economy went down the drain. The ones who made the most money over the next few years were the people who recognized the opportunity that lay at their feet. A wise man once said that luck is a combination of preparedness and opportunity. While North Peak is prepared to take advantage of any circumstance, I would strongly encourage anyone who is concerned about future economic changes to pay attention and evaluate every opportunity that comes their way. Even if the dark skies do lay ahead, we here at North Peak expect them and even look forward to the challenges. We know that those who are successful in this business are the problem solvers and the innovative. We also suspect much opportunity, and if we find opportunity, it means you find opportunity. It is our job to share that opportunity with you. Therefore, in volatile times with economic question marks, we at North Peak are optimistic and even ambitious to take advantage of any opportunity that comes our way. Hopefully this was helpful and educational to you and makes your future investing decisions just a little bit easier. Thanks again for tuning into NPU. I'll see you next time.